Okay, so also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course, our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right, well, on there on the top. Basically, it's now loading up here a little bit, but yeah, you can definitely check us out here because on a daily basis we do present very interesting different pieces, which I believe you can find quite useful. So jumping into the charts, the first one I want to pick up here is the German Index Dax, and yep, it's pushing higher today. However, it's still struggling with this downside line taken from the high of the 8th of January. So this morning, if you remember, I talked about this one as well, and well, not only this morning but in the my previous sessions as well, that in order to aim for some higher levels, we need to see a nice good pop above this downside line first. So far, we're not really getting that, so we cannot really get comfortable with higher levels. In terms of the downside, we also need to see a drop somewhere below the 13,795 territory here in order to consider maybe a possible move lower. That level is the highest point of February of last year. Jumping into the US Dow Jones here. So the index yesterday closed again slightly below that 31,000 mark. Looking at the cash index today, we can see that the price is trying to make its way higher again, but of course it still remains below yesterday's high here near the 31,087 territory. Currently the cash index is trading near the 31,050 mark, so not much left to kind of to test, or until we could see a test of yesterday's high. But the question is, can we actually go ahead and do that? I mean, will it actually have enough steam and power to go ahead with that? So let's keep an eye on this one, guys. Let's not rush into anything yet. Don't get me wrong. I mean, it does present itself with a nice opportunity maybe to go higher here, but we do have an interesting day today. We do have the Joe Biden's inauguration. So yep, let's see if this day won't kind of present any surprises or anything like that. So, but again, if there is something like that, if there are some negative news coming out, then we might see the indices reversing south. But at the moment, all eyes are on yesterday's high and of course on the all-time high near the 31,224 mark. DXY, the dollar index, is, well, it's climbing back up, or at least trying to do so. So this morning, I've talked about this when I was saying that keep your eyes on the 90.60 territory and the 21-day EMA here. You can see that that's the reason why I was saying that in order for me to get a little bit more excited with the downside, I would prefer to first wait for a drop below the 21-day EMA, and then maybe also just to strengthen the downside scenario, I would like to see a drop below the 89.96 level right here. But instead of that, we got a reversal back to the upside here. However, this barrier, it continues to act as an important level here, this 90.60 zone. So today the index found resistance around here, so let's see if it actually can overcome it and push back to the upside here towards this this downside line drawn from the high of the 23rd of March of last year. But again, the positive side is that we are still hanging above this 21-day EMA, which is currently kind of pointing to the upside a little bit here. But on the downside is the fact that we are still trading below this downside line, so which could continue providing resistance. Now gold. Gold is basically well, it's pushing higher. Let's put it this way. I mean, gold is pushing higher. However, I'm still being very careful here because what I don't want to see here is basically this one kind of maybe popping higher here above this downside line. That's my personal preference. But however, I mean, the market doesn't always do what maybe I would like it to do. So I'm gonna stick to the kind of the technicals for now, for now basically. And yep, looking at this picture here, you can see that yes, gold is pushing higher. It's currently near this key area of resistance around the 1864 level, which is marked near the last week's high. It's also near these two EMAs, the 21-day and the 100-day EMA. So basically, all this kind of does provide a potential good area of resistance. Even if we get an overshoot here, still we do have this downside line, which could act as a good area of resistance. Excuse me. But that's why I've mentioned to you previously that in order to consider the upside, I would still prefer to wait for a break of this downside line and then a push above the 1907 territory. So let's see if that's going to happen. For now, I'm still sticking to this idea that if it struggles to overcome either this 1864 level or this downside line, another slide here could be possible. Now, jumping into Ethereum, quick update here. Ethereum did drift lower here to the downside. I mean, drift lower heavily initially, but yep, it's now trying to recover somewhat. However, the same game plan remains, guys. As this is just, like I said, a quick update on where we are with Ethereum. Ethereum this yesterday popped nicely to the upside. However, I cautioned everyone that don't forget that we on the monthly chart we are very, very overstretched here to the upside. I mean, look at this beautiful strong move higher. Let's see if this can continue in February, but if it cannot, then we might see a nice good reversal here to the downside. But let's not rush into anything yet. First, let's see how this is going to continue trading near this 1405 level. That's what I'm currently watching. That level is quite an important one. And if it overcomes it, then yes, I'll aim for some higher levels. But if it continues to struggle to break above it, or even better, to stay above this area, then well, I mean, we could consider maybe a bit of a decline here back towards this 21-day EMA. Jumping into USD CAD now. Here the pair continues to slide here today, but of course all eyes are going to be on the let's actually quickly take a look at the data. I think it has not come out yet, but let me just quickly double check this. So right, okay. So in terms of the economic data here, so yeah, that's where we got the Canadian CPI figures today. So which kind of came out as a bit of a mixture here, or actually on the slightly on the lower side. So yep, not very great for the Canadian dollar. However, all eyes are still on the Bank of Canada today, which is set to deliver its interest rate. I mean, so far there are no expectations of changing that rate. However, of course, we'll be very careful and continue watching what will the Bank of Canada has to say. What will the Bank of Canada have to say in their statement? So, yep, that's why for now maybe that's the result that we're getting. The pair is drifting lower. It's ignoring the whole kind of negative results from the Canadian CPI readings, and maybe it's just waiting for the BOC. So let's see how that's going to play out, guys. But for now, I'm taking a bit of a neutral stand here, because for me to maybe consider some higher levels, I would need to see a push above the 1.2793 territory here. But in order to consider the downside, I would prefer to wait for a drop below the 1.2630 territory. Now, jumping into GBP USD, and well, with this one, look at this beautiful move here today. Of course, the pound traders did enjoy the positive CPI figures from UK. That kind of brought the pair here higher, and it's at one point it even managed to overcome this key area of resistance, which is around the 1.3712 mark. That was the previous highest point of January. Now we have reached the area around the 1.3719. Let me just grab this one right here, and I'll mark this high. So the 1.3719, that's the new high for January so far. But as you can see, a strong reversal back down kind of brought the pair heavily to the lower. Now, of course, maybe this is actually due to DXY strengthening again. So let's see how all this is going to play out. For now, in order for me to aim for some higher levels, I would actually prefer to wait for another push higher here, and a push ideally above the 1.3719, because as you can see, we did push higher. We did create a new small high here for January, but it retraced heavily back down. So that's why, guys, be very careful with the upside. And if you wanna aim for some higher levels, then probably to be on the safe side, you could wait for a push above this 1.3719 level, and then we could go, like I said, we could aim for higher levels. For now, it is how it is here, guys. Even for the downside, I would need to see a break of this short-term tentative upside line drawn from the low of the 21st of December, and then we could go for lower areas. Euro GBP. So here look at this beautiful move here, and this is what I talked about a few videos ago and well, recently. So basically what I was saying, that if this area right here, the 0.8933, continues to provide good resistance, then we might see another slide here, and if we get a break below the 0.8866 territory, then lower levels could be met. On this break, my next target was the 0.8826. We didn't really reach that area right now straight away, but let's see if this daily candle will remain below the 0.8866 territory. If it does remain below it, then my next target is the 0.8826 level, marked by the low of the 14th of May, and then I'll take it from there. And finally, EURUSD. So here the pair is reversing back down, guys, and this is what I was afraid of and I was talking about this morning. Basically, what I was saying this morning, that yes, the fact that it popped above the 1.2130 zone, that was great, but we had an obstacle here, the 21-day EMA, which, as you can see, kind of continued to provide resistance. And although we didn't really kind of test exactly that 21-day EMA, we came very close to it, and this whole area around it did provide resistance, and we saw a reversal to the downside. So now the big question here is, can this move lower? And in order to be a little bit more on the safe side, wait for a drop below the 1.2059 territory right here. A nice good drop, a nice good daily candle staying below it could open the door towards further declines. But of course, for the upside, if you're looking for some higher levels, wait for a push above the 1.2210 territory here. I do understand it's quite a bit of a move here, but let's be on the cautious side and on the safe side, and let's wait for a break above this area in order to aim for some higher levels. So guys, that was a quick overview of a few instruments that I looked at recently. So yep, I hope you found it useful. Thank you very much for joining in and watching this one till the end. If you want to catch my video tomorrow morning, as always, my Traders Espresso, that's 7 o'clock GMT time. For now, guys, I hope you have a wonderful evening. Stay safe, and I'll see you later. Thank you very much, and bye-bye.